Anybody?
So the amount I put for fixed cost is 1,200,
Okay.
all of
If
them.
we increase our level of activity to 2,100 cups, how much will the fixed cost now be?
Still be 1,200. Every one of them is 1,200 because it's fixed
Okay.
cost.
So a fixed cost behaves exactly the way we expect it to behave. It remains constant at all levels of activity within the relevant range. And then we have a variable cost, and that formula is 22 cents per unit per cup. So how much will it cost us at 2,000 cups? At 22 cents per cup. How much do you want to budget? Okay.
So for the first one, for variable cost, the 2,000 will be the 2,000 cups. The variable cost will be 440 for the
Right.
total.
And
This
2,100 cups
462,
and 2,200
400,
cups.
488.
So then we compute total cost. And because it's
Six.
a combination of fixed cost and variable cost, it's a number that can get us in trouble. I would not use 1640 for decision making, nor would I use 1662 or 1684. Because
Mm-hmm.
when we're asked to unitize the total cost, we get a number that's very misleading. So what's 1640 divided by 2000?
82 cents
And you got to write it out per cup.
per cup.
And then at 2,100 cups, what's the per
79
unit
cents per
cost?
cup. 79 cents per cup.
And finally, at 2,200?
77 cents per cup.
Now, if we tried to use these numbers, no matter how we tried to use these numbers, we would probably get ourselves in trouble. And it's because of the fixed cost that's causing these numbers to change. We know the variable cost is a constant 22 cents. So these numbers are changing because we're unitizing a fixed cost. And it's very, very dangerous to unitize a fixed cost. Now, if you want to explain to a manager how best to use fixed costs, tell a manager that a fixed cost is really a capacity cost. It gives you the ability to do something. For example, if you spend, and I'll just pick a crazy number, if you spend $5,000 on tuition this semester and you take one class, you're not fully utilizing your capacity. You should take as many classes as you possibly can. It doesn't make it any cheaper, which this is claiming. It does not become cheaper, but you want to fully utilize your capacity. So if you can, if your tuition is $5,000, take 5 courses if that's the most you can handle. But always fully utilize your capacity. And do not think that it gets cheaper, because it doesn't. Any questions about the homework? Okay, so now I want to show you regression analysis.
Yeah, quick question. Are we submitting this homework?
I think I just lost my mouse. All right, so what I'm going to do is, for a moment, is I'm going to share my screen. I'm going to try to find widget number 3, and here it is. Now, luckily, widget number 3 is already in an Excel worksheet format. But widget number 5 that you're going to do for computer project number 1, I don't know if it's in a worksheet. If it's not in a worksheet, put it in a worksheet. All right, so you're going to solve this problem. Oh, actually, I want to show you something first. Maybe you have it in your computer, maybe you don't, but let's see how to do it. And what I'm talking about are Excel add-ins. Go up to File on any Excel spreadsheet and click on File. Go down to the bottom where it says Options, and the Options window opens. Go down the first column to the word Add-ins and click on that. You notice my add-ins are active. These add-ins are inactive. I need you to have the Analysis Tool Pack active and Solver active. So once you click on them, on the bottom, it'll say OK. Click on OK. You have to make sure you have Solver and the Analysis Tool Pack. All right, but I'm not going to use the Analysis Tool Pack yet.
Wait, first I have to wait. So what do I do for add-ins?
If you're running Windows, open up a blank Excel worksheet. Go to the upper left-hand corner and click on File. In the menu on the right-hand side, go all the way down to the bottom where it says Options and click on Options. That opens the Options window. Go down the menu on the left side until you see Add-ins and click on Add-ins. In the add-in window, there will be inactive add-ins and active add-ins. You have to make sure the Analysis Tool Pack and Solver are active. If they're not active, you click on them and then you hit the word OK, which is on the bottom right. Because you need to have, for this course, Solver and the Analysis Tool Pack. All right, so the first thing I want you to do in solving this problem, and this only works in simple regression. Later this semester, we're going to do multiple regression, and what I'm about to show you will not work. But for simple regression, we can do the following. With your mouse, 5,000 across to 50 and down. So you're highlighting the X column and the Y column. Go up to the top to the word Insert. Go across until you come to all these different charts. You have to find the one that says Scatter. And it's usually the bottom one, at least on my screen, the bottom one on the left. You notice it says Insert Scatter? Click on it. And then in the options that just showed
Well,
up.
it turns out I already have the tool pack, I think.
This is not the tool pack yet. This is not the tool pack. This is just Excel charts. It's automatically in your Excel. I'll show it to you more than once and you'll get the idea. Otherwise, just watch the video of this class a little bit later today and you'll see how to do it. All right, so I'm going to click on the first chart. Notice the 8 pairs of observations are plotted. With your mouse, put your mouse on any one of these 8 data points and right-click. In the menu that opens up, scroll down to where it says Add Trend Line. Notice the trend line is there. In the menu that opened up on the right, on the bottom, check the box that says Display Equations, and beneath it, Display R Squared. Once you check those two, X out. And there's your answer. So I'm going to write down what I see. I see the line of regression is y equals, now I like to put the fixed cost first, 17,000 plus, again, I'll show you this one more time, $9 X. So there's your line of regression right here. So I know that fixed manufacturing overhead equals $17,000. And I know that variable manufacturing overhead equals $9 per direct labor hour. Now, when I did this problem, I know that manufacturing overhead is a semi-variable cost. I have to pick a cost driver that I think might explain why manufacturing overhead is changing from 50,000 in January to 120,000 in August. So what I did was I decided to guess that direct labor hours would be a good cost driver. So I went into the accounting records and I wrote down the direct labor.
How do I get the regression equation?
I'm sorry?
How do I
What's
get
your,
the regression equation? I am trying to follow along.
I'm going to show it to you a second time and then you can watch the video and you can follow the video and you can stop the video and because I can't take too much time, I'll never finish it.
Sorry.
All right, so I'm going to do it a second time. All right, so I decided from the accounting records that direct labor hours might be a good cost driver. The only way I'm going to know if I was successful or not is to look at R squared. Now I see in the diagram R squared equals 93%. So I'm going to write down R. Now I need to put down the little square. So I go to insert, I go across the symbols, I click on symbols, and I've already got the number 2 chosen, insert, close. So R squared equals 93%. I am very, very happy. I will say the following. 93% of the change in manufacturing overhead is explained by the change in direct labor hours. So it turns out that I've got a good cost driver and that this line of regression can be relied upon. Notice the last question. What is the forecasted overhead costs if 12,000 hours are predicted? So I want to answer that question. Forecasted manufacturing overhead, and it's for month 9, so for September. So I'm going to use my line of regression to answer that question. So what you could do is the following. You could take $17,000, then take $9 times 12,000 and add the two numbers. I think you're going to get 125,000 and just put your number in there. But I want to be fancy. So I'm going to use Excel to do the math. So I'm going to write equal. Every Excel formula starts with an equal sign. So I'm going to write equal 17,000 plus, open parentheses, 12,000 for the hours. Now I want to multiply, so the little symbol above the 8. And then I'm going to write $9, close parentheses, and when I hit enter, I'm forecasting $125,000 next month. All right, I'm going to do this all over again, and then I'm going to show you how to do it with the analysis tool pack. This is simply the scatter diagram approach. All right, so again, I'm going to show you the whole thing from the start. And if you watch the video a couple of times for today's class, you'll get it. Nobody ever has a problem with this. All right, so the first thing I want to do is the scatter diagram. So I'm going to take my mouse, I'm going to put it on the 5,000, I'm going to drag it to the 50 and then down. You got to do that first. Then you go to the word insert on the top, and you got all these options. You got to go to pretty much the middle where all the different graphs are and charts. And you have to find the one. For me, it's this bottom one. It says scatter. I click on it. The scatter diagram window opens, and I always choose the first one. And automatically, my data is now in the graph. With my mouse, I find any one of the 8 data points and I right click. I then scroll down to the word add trend line. And then the trend line window opens on the right. And I check the box on the bottom for equation and the box for R squared. And then I X out of this window. And I'm done. I now have my line of regression. I have my R squared. And I'll just write it out. Based on what I see, Y equals, and I'll put dollar signs in even, $17,000 plus $9 X. So that tells me my fixed manufacturing overhead is a constant $17,000 at all levels of activity within the relevant range. And my variable manufacturing overhead equals $9 per direct labor hour within the relevant range. And then the last thing I'm asked to do is forecast. So I want to make a forecast. Oh, I didn't write down the significance of R squared. Let me do that. Can't forget that. R. Now I want to get that little square, so I go to insert all the way across to the symbol. Let me do that again. Insert, symbol, symbol. I would check the two, insert, close. So R squared equals 93%, which again makes me very happy.
Wait, where do you
because I
find
can
the exponent?
say that again.
Where did you find the exponent?
Yeah, how I get the exponent? You go to insert,
Yeah.
all the way across to the word symbol. Click on the word symbol, and this gives you all the possible inserts you could choose. I want the little exponent. So it's already checked because I keep using it. And you go down and click on the word insert, and then close. Oops, it came in here when I didn't want it. 93%. Oops, I made it too high. 93% of the change in manufacturing overhead is explained by the change in direct labor hours. So if I want to, if I really want to make a speech, my cost driver, direct labor hours is wonderful. That's if I really want to get carried away. All right, so now I want to make a forecast because you get a line of regression, you want to use it. So I want to forecast for September if 12,000 hours are predicted. So I like to use a formula to do that. Equals 17,000. Let me see if the dollar signs will work. I don't know. This could be a mistake, but I don't know if they'll work. $17,000 plus $9 and the little star above the 8 times, oops, 9 times 12,000. Oh, I wanted $9. Yeah, again, this may not work with the dollar signs. Let's see. Nope, it didn't work. Okay. Uh, dollar signs have special meaning in Excel. So let's see. This should work now. Nope. It says I made a mistake. Let me start again. 17,000 plus 9 times 12,000. There we go, 125,000. All right, so that's how you solve the problem using the scatter diagram. I'm now going to solve the problem using the analysis tool pack, which will work regardless of what kind of data we have. Right now, I have, as I told you, simple regression data. I have one independent variable and one dependent variable. When we do multiple regression and I have more than one independent variable, I have no choice but have to use the analysis tool pack. So here's how you do it. Go to the word data, go all the way across to data analysis. Click on it. The data analysis windows opens. There's a lot of different quantitative techniques that are hiding here. I want to scroll down to regression, and I click on it, and I hit the word OK. And the regression window opens. It's very simple. Go to the Y range. Make sure the box is highlighted. So I'm in the Y range box. I go over to the data. I put my mouse on 50,000 and I scroll down to 120. Then the next box I want to go to is the X range. I click on that box, and with my mouse, I go to the X column and I scroll down from 5,000 to 11,000. The next thing I have to do is go to the output range bubble. Click on it, click on the box. Now, scroll down on your worksheet. With your mouse, just do something like that and then let go. And then hit the word OK. And there is the work done for you. There's R squared, 93%. There's the fixed cost, 17,000. There's the variable cost, $9. So we get the same answer using the analysis tool pack. So let me show that to you again. So let me X out. I'm not going to save it. So I'm going to open up the worksheet. So I go to data. I go all the way across to data analysis. If you don't have that Excel option, then you gotta do what I showed you at the beginning of the problem. You gotta enable the analysis tool pack. And notice there's Solver for later this semester. So you want to make sure that Solver is enabled. I'm going to click on data analysis, and the data analysis window opens. I'm going to scroll down to find regression. I click on regression and I hit the word OK. I click on the first box where it says Y range. And with my mouse, 50,000 down to 120. I now want to enter the X range. I go to the second box and click on it. And then with my mouse, 5,000 down to 11. Go to the output range bubble and click on it. Click on the box. And then below with his room, with your mouse, just do something like that. Let go, and then hit the word OK. And there's your answer. You got an R squared of 93%. I'm sorry, R squared, 93%. You got your fixed cost, you got your variable
My
cost.
coefficient says 22,319, but it shouldn't be, right?
Say again?
My coefficient says 22,319.
I
That
don't
shouldn't
see
be the case, right?
I don't see that. Where do you see that?
It says in the summary output. Well, for me,
I can't answer that question. I don't know. All I can show you is this way, and the numbers you'll get every
Mm,
time if you do it this way for this data. Okay. Anybody have any other questions? All right. So I'm going to stop sharing, and I'm going to open up the whiteboard again. And we're going to go on to the next topic. On both devices, Mac is different than a Windows computer in terms of what you do. I would say go to Google and ask Google on a Mac computer, how do I enable the analysis tool pack and solver? You want to know something? It's easier to enable it on a Mac than it is on a PC. There are steps I have actually written down, but you can find it from Google. Take you 1 minute to find it. All right, let me just make this larger. And I'm going to turn my computer over to be able to write on it. So we're now going to the next topic. It's Garrison, Chapter 5, and it's called Cost, Volume, Profit Analysis. Now, this is a logical extension of what we did on Tuesday when we did review of cost behavior. Now, I've decided to divide this chapter, although it doesn't say so on the syllabus, into 6 separate sublessons. Each sublesson will have pages assigned in the textbook and exercises for homework. So as we go along and complete each of the sublessons, I will give you the corresponding homework assignment. Now we're going to begin with the first sublesson based on the following income statement from financial accounting. And it's called a functionally oriented income statement. You have no choice. GAAP tells you that in financial accounting, in your annual report, your income statement must follow a functionally oriented format. So for your stockholders, your creditors, and anybody else external to the company. Now, a functionally oriented income statement means your costs will show the manufacturing function, and the selling and administrative functions. Now, you're going to see this in cost of goods sold in a moment, and you're going to see this in the category called operating expenses. So in the problem I'm going to give you, and I didn't do this in the first class, but I think I'm going to do it this way in this class. I'm going to tell you that as of December, or I should say for the year ending, December 31st, 26, our company had revenue of $1 million. And it had cost or expense of 800,000. Is it 800? No, we'll make it 900. And therefore, we had net income of 100,000. Truthfully, this could be an income statement. It just doesn't have much information. So generally accepted accounting principles requires that you take this information and put it into a functionally oriented income statement. Okay, if that's what the accounting profession wants, that's what we'll do. So it turns out we sold 100,000 units at $10 per unit, a constant selling price. So we have sales of $1 million. In fact, let's imagine that we only sell one type of product and we sold 100,000 units of that single product. All right, here's the manufacturing function, cost of goods sold. It cost us $800,000, direct materials, direct labor, manufacturing overhead. And therefore we generated a gross profit of $200,000. We then had our operating expenses, the selling and administrative expenses, and they totaled 100,000. And therefore, in our functionally oriented income statement, for the benefit of stockholders and bondholders, we earned $100,000. Any questions about this very simple income statement?
Oh, right. The sales. What is it supposed to look like? What is that supposed to say?
100,000 units were sold at $10 per unit. And that's $1 million. Now, notice what I did. The $900,000 of cost by function. The manufacturing function for 800,000 and the selling and administrative function for 100. Now, you are a stockholder, and let's say you own 10,000 shares of stock. And let's further say you're a stockholder and you know nothing about accounting. So now you got the income statement and you have to make a decision for next year. Should I buy more shares of stock? Should I sell shares of stock? Or should I just keep my 10,000 shares? Gross profit. All right. Now, you will make your decision the way most people make their decision by forecasting net income for next year. Now, you might ask a financial analyst to help you, but you have to make a forecast. If you think the net income is going to go up to a certain number, that might lead you to buy more stock. On the other hand, if you think the net income is not going to go up very much, you might decide to sell your stock. Suppose I tell you that the company has announced that it is going to double production and sales next year. So that means 200,000 units will be produced and sold. So now, what are you going to forecast? You, the stockholder, who doesn't know anything about accounting, what are you going to forecast the net income likely to be next year? In this year, 2026, when 100,000 units were sold, you earned $100,000 of net income. What are you going to forecast? What do you think?
$200,000.
Yeah, I think most people are simply going to do this because they don't know better. So they're going to hypothesize that net income next year will be 200,000, and then they'll make whatever decision they want to make. But do you think that $200,000 forecast is correct or not?
No, because of the labor and their fixed costs.
All right, because of cost behavior, we know that that's wrong. But there's nothing the stockholder can do about it because the stockholder doesn't know anything about cost behavior. All the stockholder gets is this functionally oriented income statement. But we as management accountants, we can provide information to management for purposes of so now I'm the management accountant. Now, I want you to picture this. I'm going to examine cost of goods sold, and I'm going to examine the operating expenses. Because I'm now inside the company and I have access to all the data. Now, cost of goods sold in the income statement for our stockholders totaled 800,000, and the operating expenses totaled 100,000. But what I want to do,
Does that say cost of goods sold or stockholders?
yeah, the income statement that was on the last whiteboard, the functionally oriented income statement. That's the income statement that the stockholders get. They do not get what I'm about to show you because I'm no longer doing financial accounting. I am now doing management accounting. Right. That's the cost of goods sold from the income statement, and that's the operating expenses from the income statement. And I'm going to examine the 800,000. I want to figure out which items are fixed and which items are variable. So I look at cost of goods sold. 100,000 units were sold. I know that the direct materials is a variable cost. I know that direct labor is a variable cost. I know that manufacturing overhead has a lot of elements that are variable, like electricity. So I'm going to examine every one of the costs that make up the 800,000. And I'm going to determine, and I'm just making up a number, that 650,000 out of the 800,000 is variable cost of goods sold. And the remainder is 150,000 of fixed cost of goods sold. Depreciation on the factory building, depreciation on machinery. Now I'm going to look at the operating expenses, which total 100,000. I'm going to look at salesman's commissions, which is a variable selling expense. Depreciation on a salesman's car, that's a fixed selling expense. I'm going to look at electricity in the general office. That's a variable cost. The president's salary is an administrative expense. That's a fixed cost. So I'm going to look up every single item that makes up the 100,000 of operating expenses. And I'm going to find that 50,000 is variable operating expense and 50,000 is fixed operating expense. So now, as a managerial accountant, I know that my total variable cost is 650 plus 50, 700,000. And my total fixed cost is 200,000. I've got the same $900,000 of cost that was incurred in 2026. But instead of having 800,000 of cost of goods sold and 100,000 of operating expense, I have variable cost of 7 and fixed cost of 2. And with this data, I am now going to prepare an income statement for problem solving and decision making. And it's not called a functionally oriented income statement. It's going to be called a cost behavior oriented income statement. So I'm doing this for the year ending December 31st, 26. My sales are the same, 100,000 units, my single product that I sold for a constant $10 per unit selling price. So I have my $1 million of sales. But now, my next line is going to be variable cost. From the analysis we just did, my total variable cost is 700,000. Because by definition, a unitized variable cost remains constant at all levels of activity. I need to know how much is this company's variable cost per unit. I know its selling price is a constant $10. How much is its variable cost? What number would you get? If my total is 700,000, when I manufactured and sold 100,000 units, what is my variable cost per unit? How much?
1.4.
700,000 divided by 100,000 is $7. Right. So I'll just write it as 100,000 times 7. And I know based on cost behavior, if I pick any other level of activity, if I said right now, let's do an income statement at 90,000 units, you're going to do 90,000 times the selling price of 10. You're going to go 90,000 times $7 in order to get the variable cost. Because you know by definition, a unitized variable cost remains constant at all levels of activity within the relevant range. The difference is called contribution margin. And I have to spend a little bit of time explaining contribution margin, which I will. But I want you to see one way of defining contribution margin, the difference between variable cost and sales. A million minus 700 is 300,000. Now, 10 minus 7 is 3. 100,000 units times the $3 contribution margin per unit gives you that 300,000 of total contribution margin. The $10 of selling price is always constant. The $7 per unit variable cost is always constant. And therefore, because the contribution margin is a residual, 10 minus 7 is 3, therefore the $3 is constant. Fixed cost. I gave you the total fixed cost of 200,000. And the net income, the same net income as before, 100,000. The only difference is the $900,000 of expense is now in terms of variable cost and fixed cost, and not cost of goods sold and not operating expenses. Now, the beauty of this income statement This is an income statement, as you can see, at 100,000 units. I told you that next year, production and sales will double. That it's going to go from 100,000 to 200,000 units. So over here, let's see if we can do an income statement for 200,000 units. How much would the sales be? If I have an income statement for 200,000 units, what will my forecasted sales be? Okay, 200,000 times $10. Very good. What will my forecasted variable cost be at 200,000 units? Based on cost behavior, what are you going to forecast your total variable cost next year, 2027? That's correct, Tiffany. So it's 200,000 times $7 per unit. Now I could get the contribution margin by subtracting, or what's 200,000 times the contribution margin per unit of $3? 200,000 times 3 equals the 600,000. What should I forecast the fixed cost to be next year? Clement, cost behavior. Cost behavior. A fixed cost remains constant as the level of activity changes within the relevant range. A fixed cost remains constant in total as the level of activity changes within the relevant range. So I'm forecasting net income next year. It's not going to double. It's going to quadruple. The stockholder doesn't know that. The stockholder doubled the net income from 100 to 200 and made his or her decision. If only the stockholder would have known that the net income is likely to quadruple, maybe that stockholder would have bought a lot of stock. But this income statement that you see is for the benefit of internal management. It is for problem solving and decision making. Any questions? Okay, now we need to talk about contribution margin because this is one of the most important numbers. All right, I'm going to get rid of next year and let's just work with this year. I want you to think of contribution margin as having two jobs. Actually, it probably has three jobs, now that I think about it. So let's look at job number one. All right. I want you to think about this. I'm no longer a manufacturer. I just own a store. And here's how I operate. I sell only one product in my store. I buy my product from my supplier, who charges me $7 a unit. I turn around and I sell that product to a customer for $10 a unit. Therefore, I net $3 per unit every time I sell one unit. So I want to emphasize that the $3 per unit is a residual. My selling price of $10 is a variable. In other words, I could raise my selling price to $11. I could cut my selling price to $9. It's a variable. My variable cost is $7 per unit. It's a variable. My supplier could raise the price to $7.50, or my supplier could lower the price to $6.25. It's a variable. But the contribution margin is just the difference between those two numbers. That's why I call it a residual. I can't make the $3 change by itself. I can have the selling price change, I can have the variable cost change, and that would have changed my contribution margin, but I cannot change my contribution margin directly. Now, job number one, pay for the fixed cost. You notice I have $200,000 of fixed cost. Every time I buy a unit for $7 from my supplier and sell it to my customer for 10, I net this $3. I gotta sell a lot of units, netting $3 to pay for that $200,000. In fact, I'm a little ahead of myself. I'll show you this. If I take the fixed cost of 200,000 and divide it by the contribution margin, I get 66,000. I'm going to round it off, 667 units. So I've got to sell at least 66,667 units, netting $3 a unit in order to pay for my fixed cost. Any questions about that? Now, job number two. Just to make some room. Okay, here comes job number two. After I pay for the fixed cost, all right, so what I'm writing here is very, very important. Job number two. Maybe it's easier for you to visualize it this way. I'm thinking of introducing a new product. I know, well, no, I don't want to do it that way. Forget what I'm saying. Let me simply say this. If I sell exactly 66,667 units, I will exactly pay for my $200,000 of fixed cost, but I'm not going to have any net income. No net income. So if I want to earn net income, I've got to sell, let's say I sell one more unit. So I sell 66,000 668 total units. That extra unit will get me net income equal to $3. If I sell 2 units, I will have net income of $6. What I'm trying to say is every time you sell a unit above 66,667 units, you'll get net income at a rate equal to $3 per unit. So if I go 1,000 units above 66,000, my net income is going to be exactly $3,000. Does everybody understand that? The function of contribution margin at $3 per unit is to first cover the 200,000 of fixed cost. And then, if you want to make net income, sell more units past the 66,667 level, and you will earn net income. So that's and I'll give you a third job, okay? And this also is very important. I'm actually going to give you a problem. Let's see if you can solve it. This is a problem a manager is likely to ask you. And this would be an example of job number 3. Contribution margin is needed in decision making. All right, so here's our income statement.
Where's job number 2?
Job number 2 is earning net income at a rate equal to $3 per unit.
At a rate of $3 per unit.
Because
Okay.
that's the
I
contribution
guess
margin.
I see that's why I see that's why we had job number 2 actually. So job number 1 is actually job number 2.
Job number 1 is at $3 per unit. The contribution margin has to first pay for the fixed cost. And then at $3 per unit, the contribution margin has to give you net income. And now, job number 3, the contribution margin can be used in problem solving and decision making. And here's how. Suppose the manufacturing vice president wants to rent a second factory and it will cost $30,000. And rent is a fixed cost. So we have the manager saying, I want to increase the fixed cost by 30,000. And we have to decide if that's a good or bad idea. So the manager tells us that if we have the second factory, our sales, the number of units we sell, sales will increase 4%. And I want to know if that's a good decision or not. So the first thing we should figure out is if sales increase 4%, how many additional units will we be selling? How am I going to get that answer? If sales are going up 4%, how many units are we gaining by having this second factory? How do I do that? How many you? Okay, no, I don't want the total. I want how many units are we gaining, Tiffany? So change your answer. Tell me what to write instead. You're in the right ballpark. I just want to know the additional units. Okay, so currently we're selling 100,000 units. They're going to go up 4%. So that means we're going to have 4,000 units. Let me just get rid of this. Because now I want to have a decision-making schedule that I'm going to give to management. So I'm going to write down, let's see. How shall I put this? Increase in fixed cost. My fixed cost is going to go up $30,000. And I'll treat that as a negative number because it's a cost. Now, if I'm going to sell 4,000 units, how do I calculate the benefit of those extra 4,000 units? Remember, you're doing job number 3. That's a hint. What is the benefit to us? Increasing our sales by 4,000 units. What are we getting by selling an extra 4,000 units? Well, remember, right, the
So 4,000.
contribution margin per unit is $3. So every time we sell a unit, we get an extra $3. So we're going to get $12,000 of additional contribution margin. So increase in contribution margin, which means the net income is going to go up. And I'll explain that in 1 second. We're going to get 12,000. So, is that good or bad? Good or bad? Right. So I'm going to write down decrease in net income. If we do this, we are going to be worse off by $18,000. That is a bad plan. And how did we solve it? How did we do problem solving and decision making? We used the contribution margin per unit.
So the main
Now, I
point
mentioned
behind
this.
jobs 1 to 3 is use the contribution margin.
I'm so say that again.
I said so the way to solve jobs 1 to 3 is
Well, no,
finding the
I'm telling you that contribution margin is a good thing. It can be used to do a lot of things. It doesn't really have a job. Contribution margin is used to pay for fixed costs. Contribution margin is used to generate net income. Contribution margin is used in problem solving and decision making. Those are the 3 things I just illustrated. Now, notice this statement here. If you increase your contribution margin, you automatically increase your net income. The same thing is true for the opposite. And I want to just prove that to you. I just want to make sure you know that. So I'm going to put back the income statement. So here's our income statement. So I'm telling you that whatever I do here will have the same effect here. So if I add $100,000 to my contribution margin, what's going to happen next? What about my fixed cost?
it doesn't change. It doesn't change. It stays the
Therefore,
same.
if I add 100,000 to my contribution margin, it's exactly the same thing as adding 100,000 to my net income because the fixed cost remains the same. Now, what if I subtract something? What if I subtract 18,000? What we just got. What's my new contribution margin? If my contribution margin is going to go down 18,000. No. Okay. 282. Right? It's okay. So now that's my new contribution margin. What's going to happen to my fixed cost? Stays the same. What's my new net income? 82,000. And what is that? That's 18,000 subtracted from the net income. So you see, when I change the contribution margin up or down, it has the same effect on the net income. Okay, now let's try this decision-making problem. We just determined that a 4% increase in sales won't get it done. So now the manager says, oh, look, I want to spend, I insist, I want to, I want to spend that $30,000 on fixed cost, on rent. I insist. So the manager then says, what is the minimum required increase in sales? This is the better question. To offset the 30,000. This is what the manager should have asked right away, and not simply saying 4%. So how are you going to solve it? How are you going to answer this question? How many additional units must we sell in order to offset? Well, you're in the right neighborhood, but you made a mistake, Ralph. The question says, what is the minimum required increase in sales to offset the $30,000? Now, Ralph almost did it right, but not quite. Because how do you get 10,000, Miguel? How'd you do that? Because 10,000 is correct. How did you do it? Take the fixed costs that we need to cover, and our contribution margin is going to do the covering. And therefore, if we sold an extra 10,000 units, we would get $30,000 of contribution margin, which would exactly cover the $30,000 of rent. So again, you see contribution margin in problem solving and decision making. Now, let me give you the first part. Actually, I can give you the homework assignment. Again, we're going only with the 18th edition. So, assuming I get to finish the next sub-lesson, this will be the homework. You're going to read from 195 to 198. You're going to do exercise 5-2. And then, in the sub-lesson that I'm about to start now, you're going to read 201 to 202, 204 to 205. Oops, I got the numbers wrong. I jumped ahead. Sorry. So 203 to 204, 205 to 207, and you're going to do exercise 5-4 and not yet, not yet, widget number 6. See, widget number 6 says additional homework, but I'm not going to get to show you that. So all you're going to do is 5-4, and then next Tuesday, I'll show you the rest of this subtopic, and then you'll be able to do widget number 6. And as a reminder, computer project number 1, which is widget number 5. Do no later than. I will not accept it later than
But
Thursday,
we have to do widget
February
5
4th.
like tonight.
I'm sorry?
We have to do widget 5 like tonight.
I did widget number 3 today.
Oh,
That's the practice problem. You're going to do widget number 5. And again, it's due no later than next Thursday. All right, so
And the homeworks are
the homework that I just gave you, you do it. You don't have to send it to me. We'll go over it next Tuesday.
Got it. Thank you.
You don't have to email me homework unless you're having trouble with your homework problem and you want me to help you. I'll be glad to do it.
Thank you.
All
But
right, now
Professor,
we're going to do the next sub lesson, which is called target net income. And there are several target net incomes that I want us to calculate for problem solving and decision making. The first target net income, and in a way we already did it, believe it or not. I want my target net income to be equal to nothing. So that would mean if I had an income statement, I'm just making up numbers for a second. Okay, look at this income statement. This is an income statement where the net income is 0. And there's always something that's true. First of all, total revenue, 200,000 equals total cost, 150 plus 50. And then there's one more thing that's always true. Total contribution margin always equals total fixed cost when your net income is 0. Now, what you see here is called the break-even point, when we earn nothing. Now, if you're a company that's going to introduce a new product, you're hoping, at least in the first year, that you sell enough units so that you break even. At least you don't lose anything. And the hope is in the following year, maybe you'll start to make an income. But even an established company wants to know its break-even point. So let's look at our company. We are not earning 0. In 2026, if you remember, we sold 100,000 units at $10. We had sales of $1 million. We have a variable cost that's a constant $7 per unit, and that was 700,000 at 100,000 units. And the residual, the contribution margin, was based on $3 per unit times 100,000 units. And then we had fixed cost, 200. So we had a positive net income. So we are not breaking even. We're earning $100,000 more than what you would earn at the break-even point. But we might want to know our break-even point because of something called product risk. Where we are today and where we don't want to be. The closer you are to break even, the more you have to worry. The further away you are from break even, the less you have to worry. So even an established company like ours would compute the break even point. So we're going to use a formula. And in this case, I'm going to call it the X formula. Let X equal number of units. Then I want my formula. X equals fixed cost plus target net income divided by the unit contribution margin. So a manager is going to ask you, how many units do I have to sell in order to break even? Therefore, we would use the X formula to answer that question. Now, X equals the fixed cost of 200,000. How much is the target net income if you're at the break-even point? What do you want to earn as your net income at break-even? What's your answer? What's your target net income? Right. Because break-even has a net income exactly equal to 0. And how much is my contribution margin per unit? My most important number. Okay, so I'm going to divide by $3. So when I divide dollars by dollars, I get my answer in units. What's my answer? How many units to break even? Okay, round it off. That's fine. That's a good idea. We're going to have a slight rounding error when we check our work, but that's okay. So we would report back to management 66,667 units to break even. Most of the topics we cover in this chapter, there's a benefit to preparing an income statement based on the answers we get as a way of checking our work. So in other words, I want to check to see if we correctly computed the break-even point. So what do? I make up a cost behavior income statement at 66,667 units. Sales, variable cost, contribution margin, fixed cost, net income. If I get 0, then I know I did it correctly. So my sales, 66,000. Again, we're gonna have a rounding error. It's unavoidable. Times $10. So we've got 6,6,6,6,6,7. Nope. I think I have an extra 6, 6,600,000. This is 667. Let me make sure I got that. I don't think I have that right. 666, comma 667. That looks right. And now the variable cost, 66,667 times $7 is how much? I don't have that number. Can you give me that number? So somebody multiply 66,667 times 7.
So how do we get this? Because I'm sorry, I wasn't.
What do you mean, how do we get this? How do we get 66,667?
Yes.
You use the X formula. X
So
equals the fixed cost plus the target. It's in the previous whiteboard.
so 50,000 divided by.
All right, I'll write it again. Fixed cost plus target net income divided by the contribution margin per unit. That's the X formula I just gave you. And when you solve the X formula, you get 66,667 units.
How do we get the 700,000?
Which number?
How did we get the 700,000 for?
I'm multiplying 66,667 units times $10. I guess I'm rounding it a little because I don't want to have a rounding error. And the contribution margin, 66,600. You know what? The safest thing to do, let me change it. All right. Here's what I'm going to write. So we won't have an issue. But sometimes rounding bothers people. It doesn't bother me, but there we go. This is the exact answer. All right, so now what I want you to do with your calculator is multiply 66,666 and 2/3 units times $10. Now what do you get? What are you going to get now? So really what you should do is carry it out, 0.6666 as many times as you can. Right. So now we can write. And now I can round it correctly. Now do $7 times 666, 666 and 2/3. Carry it out all those decimal places and then round it up. What will you get? This way you're going to avoid a rounding error. I think we were given a few minutes ago that number. And if you do the same thing with the $3 per unit of contribution margin, you're going to get 200,000. And the fixed cost is 200,000. And therefore the net income is 0. So we know we did the problem correctly. I just lost my whiteboard. I don't know what just showed up on my screen. I don't know what that is. It's not on your screen, but there's something weird on mine. Anyway, we just proved that we correctly calculated the break-even point as 66,666 and 2/3 units. Now, the manager said, how many units do I need to sell in order to break even, in order to earn a net income of 0? And you answer. But what if the manager said, how much are my break even sales dollars? How would you answer that question? The manager no longer wants an answer in terms of units. The manager wants an answer in terms of sales dollars. And here's your answer. You put a dollar sign there. Hit a dollar sign. Or technically, that'd be wrong. There are your break-even sales dollars. If you earn $666,667, you will break even. Now, we got that answer because we checked our work. Oh, but let me go to the next whiteboard. What if we didn't check our work? In other words, you used your X formula and you got as your answer. And again, I'll do the rounding. And the manager says, what are my break-even sales? How are you going to give her the answer? You no longer have that income statement in front of you where you could just circle the number. The manager says, what are my break-even sales dollars? You use the X formula. You got the answer in units. The manager wants the answer in dollars. What are you going to do? Thank you. So you're just going to multiply by the selling price, and you will have the answer. All right. But what if the manager gave you a different problem? I'm just going to make up different numbers. I don't know if I want to use this income statement yet, but I want to give you this income statement, and then I'm going to maybe come back to it. I'm not sure yet. But let's say this is a different company's income statement, and they earned $2,000 when their sales were 50,000. And the manager said, how many units to break even? So you would assume you could use your X formula, right? So you would start to write X equals fixed cost plus target net income, 0. Now you want to divide by the unit contribution margin. How much is it? Look at the income statement I'm giving you. How much is the unit contribution margin?
It's so do we divide 10,000 by wait, so the original is 3, right? The original
You're
CM is
doing a
3.
different problem. Tiffany is correct. We cannot figure out the contribution margin per unit because we don't know the number of units. So if I gave you this problem, and I will on exam number 1, you will not be able to use the X formula. Oh, so what can we do? I'll come back to this problem in a moment. Let me go to the problem we're currently working on. See, this is a completely different problem, but I'm going back to our problem. Now, we found break-even sales dollars when we used the X formula and got our 66,667 units, and we multiplied it by 10. But as you can see over here, you can't do something like that. Luckily, there is another formula. The X formula gives you your answer in units. There is an alternative formula, and I'm going to call it the Y formula. Let Y equal sales dollars. And the formula is Y equals fixed cost plus target net income So the Y formula has the same numerator as the X formula, but it's going to have a different denominator. It's going to have something called the contribution margin ratio. Contribution margin ratio. Temporarily, I'll have to get rid of this. I need room. Now, the contribution margin ratio is the ratio of the contribution margin to the sales. Now, I can do it one of two ways. I could do $3 over $10 is 30%. Or I could do 300,000 over $1 million is 30%. That's telling me, by the way, out of every dollar of sales, I net 30 cents of contribution margin. Now, the contribution margin ratio has a complement called the variable cost ratio. And it's the ratio of the variable cost to sales. And I can do it either 700,000 over $1 million or 7 over 10.7. By complements, they add to 1. So if my CMR is 0.2, then I automatically know my VCR is 0.8. They've got to add to 1. The variable cost ratio is telling me out of every dollar of sales, I got to spend 70 cents on variable cost. Any questions on computing the contribution margin ratio or the variable cost ratio?
So the variable cost. Wait. So the Y can also be used to solve the other problem that the problem that we're gonna get to.
Y gives you sales dollars. Y
Yes.
equals fixed cost plus target net income divided by contribution margin ratio. So if I want to know the sales dollars for the company you see on the right, I'm going to take Y equals the fixed cost of 200,000 plus 0 divided by the contribution margin ratio of 0.30. What do you get when you divide $200,000 by 0.30? And you will get your answer in dollars. Somebody do that and
The
tell me what you get.
666,000.
Actually do it on a computer. You're missing a dollar sign. You got to remember to put in a dollar sign if that's what we're getting. So the Y formula will give you your answer in dollars. And in this problem, the manager wants the answer in dollars. So we use the Y formula to get the sales dollars. If the manager wants the answer in units, we use the X formula, which will give you your answer in units. Now, the problem that I gave you, that you are going to be forced to use the Y formula.
So that one doesn't ask about units, but rather dollars.
What matters now is the example in front of you. This example wants to know the break-even point. The manager is screaming at the managerial accountant. What is my break-even point? I got to know my break-even point. Well, all I can say to the manager is, I can give you your break-even point, but it's not going to be in terms of units because I don't know the number. We'll see, Ralph, if that's correct or not. But I don't know the number of units, so I cannot use the X formula because I can't figure out the contribution margin per unit, which you need to know if you're using the X formula. So I'm going to have to use the Y formula. So Ralph thinks the answer is 40,000. Let's see. Y equals fixed cost plus a target net income of 0, because we're trying to find break even, divided by the contribution margin ratio. So how do you find the contribution margin ratio in this example?
You divide the contribution margin by the sales.
So I've got $10,000. I'm going to have to do it in total, so I don't have a choice. So I've got a contribution margin ratio of 0.20, which tells me my variable cost ratio, which I may or may not need, is going to be 0.8. But I want to compute it anyway. So I'm going to take the variable cost of 40,000 from the income statement and divide it by the 50,000 of sales. And I have 0.8. That's good. So now I'm going back up here to the Y formula. When you divide dollars by a decimal, your answer is in terms of dollars. So what's $8,000 divided by 0.20? Is it the $40,000 that Ralph suggested or not? Do we get $40,000?
Yes.
Okay, so we found the only thing we can find, break-even sales of 40,000. Now, we need to check our work Because how do we know that Ralph didn't make a mistake or we didn't make a mistake? Well, we'll find out if we do an income statement at $40,000 of sales. We hope to get a net income of zero. Well, the next line says variable cost. How do you find the variable cost at $40,000 of sales? How are you going to figure out this number? Any idea? All right, let's skip it for a moment. No, you don't, divide's not going to work. Let's skip that for a moment. How do you find, nah, I don't want to skip it. I don't want to skip it. You're going to use the variable cost ratio. Everybody should have known that. 40,000 times 0.8. So the variable cost, when the sales are 40,000, the variable cost is 32,000 because the variable cost ratio is 0.8.
Where did you get the 0.8?
We just computed it in the previous whiteboard. It's the variable cost ratio. Now, I want to get the contribution margin, but I want to compute it instead of subtracting. How do I find the total contribution margin when the sales are 40,000? I'm going to use the contribution margin ratio. 40,000 times 0.20. 8,000. How much is my fixed cost when my sales are 40,000?
$8,000.
And therefore my net income is zero, and I did
Yes.
it correctly. All right, let me give you one for practice to make sure you can do this. And then we've completed everything that we needed to do today. And the homework that I gave you, 5-2 and 5-4 for Tuesday's class. All right, so let me give you another problem. And I'm trying to force you to use the Y formula. So let's see if I can make up some numbers. 200,000. And I'm just making up numbers. I don't know how it's going to work out. 150. Contribution margin 50. I'll be nice. I'm going to pick. I was tempted to put down more fixed costs than the contribution margin to give you a negative net income. It would not have affected the solution of the problem at all, but I don't want to introduce something that might bother you. So we're currently earning 20,000, but we want to know the break-even point. And you have no choice. You're going to use your Y formula. So work it out now. Work out the Y formula. And again, I want to remind everybody, if you haven't already sent me a single confirming email that you've attended one class or that you watched one video of a class, please send me that confirming email. And to remind you, widget number 5, computer project number 1, no later than next Thursday, February 5th, or it's not going to be
So
accepted.
what's concerning me is that because I was using the regression equation for for it, but I got the different answers. I'm afraid that I'll
I'm
get.
not, I can't follow the question that you're asking. I'm not picking it up. Why don't you wait until we're done with the class and then ask me the question, and I'll have more time and we could actually write it out on the chat box if I can't follow the question.
I'll
All
have
right.
to send you an email though. My dad will be waiting outside.
You email me the computer project. That's the only thing you email. Plus your confirming email for attendance. All right, so let's see. The first thing you're going to do, I guess, is write your formula, leaving blank what you don't know. So what are you going to put in the numerator to start with? Because that we know. If I'm asking you for break even, what are you writing in your numerator? Good. Perfect. You got your fixed cost plus your target net income. Now, in the denominator, you're going to have to put in the contribution margin ratio. So, what did you compute as your contribution margin ratio? And you got that by taking good 50,000 divided by 200,000 of sales. We have a contribution margin of 25. Out of every dollar of sales, we net 25 cents. It's always a good idea to do the variable cost ratio at the same time. So I'm going to take the 150,000 divided by 200,000, and I really should have dollar signs when I'm doing this. And that's 0.75. So out of every dollar of sales, we have to spend 75 cents on the variable cost. So if I divide, or if you divide $30,000 by 0.25, what did you get as your break-even sales dollars? All of a sudden, my pen stopped writing. Let me plug it in for 1 second. And hopefully it'll start to write. Okay, it should work now. What's $30,000 divided by 0.25? What did you wind up getting for break-even sales? All right, $120,000. So if we have an income statement, and we will in a moment, at $120,000, we should get zero as our net income. Let's see if that's true. So once again, we can check our work via an income statement at $120,000. So the first thing I want you to fill in is the variable cost. How do you find the variable cost at $120,000 of sales? What are you going to do? Good. You take the sales times the variable cost ratio, and that got you what number? I think that's 90,000, if I'm not mistaken. Okay. Now I want to compute the contribution margin ratio. So what am I going to multiply the sales by? The contribution margin ratio, and that gets us 30,000. And the fixed costs are 30,000, and the net income is zero. So we did it correctly. Any questions about what we've covered today? So you got two homework problems, 5-2, exercise 5-2, and exercise 5-4 in the 18th edition. You got some pages you can read, and you got the computer project. A lot of people already in the first class did the computer project because it took them maybe another 5 minutes at the end of class to do the scatter diagram and the analysis tool pack. So you may want to do it as well while it's fresh in your mind. But it's due no later than next Thursday.
All right. Um,
So let me just shut off the video and I'll stay
right.
on if you have questions. I want to thank those who participated today. I wish everybody a good weekend. Let me shut the recorder off. Okay. Take care, Tiffany. And if anybody has questions, I'm staying
Yeah.
on to answer them.
Yes. So we just need to submit only project, right? Hello?
So maybe the best thing is if you do have questions, you want to write it out in the chat box. That'll make it very clear to me what you're asking. Because unfortunately, the hearing via this headset that I'm using, and I've tried other headsets, not very good. Thank you, Devin. You too. Anybody have a question? All right, if not, I'll end this session. The recording should have stopped. Yeah, it did stop. Okay. Yeah, you email me the Excel worksheet with your solution. And if you haven't already confirmed the attendance, email me that as well. Homework, you do not have to email. All right, so let me end this session.